Welcome back, traders and investors. We have Greg Harmon on the line. He's the CIO and partner at Presidium Capital, as well as the founder of Dragonfly Capital. Greg, how are you doing this morning, and how have you been handling the recent volatility in the markets?
Hi, Brianna. Thanks for having me on. Yeah, it's been a spell of downward movements up until I guess the perception is that the Fed saved the market yesterday. I don't necessarily share that view, but I think that if you've been positioned for protecting your portfolio, you haven't really had a problem in this environment.
Wait a minute, Greg. Did I hear you right? Did you say that the removal of considerable time and the inclusion of patience didn't save the market? I'm just teasing with you. Did we lose him?
Greg, are you still there?
Oh,
Oh.
just took a minute. But how?
Yeah, no, from my perspective, I think that investors got spooked. Maybe it's tax loss selling, maybe it's Putin, maybe it's oil, and just started saying, well, coming into year end, I've got the holidays, want to spend time with the family, I don't want to deal with this stuff anymore. The Fed didn't do anything yesterday. The Fed just said, we're at the same place we've been. That's basically all they've done.
So what are you thinking then as everybody kind of, gets away and, starts leaving the markets to go spend time with the families? Do you see the Santa Claus rally hanging around? Or do you think that this whole expectation of some sort of Christmas boost is going to kind of just dwindle itself away?
Well, from a technical perspective, I see that, what we're doing now in the S&P, it's going to show a nice little hammer candle on the weekly today if it holds up at this level. Mm-hmm. And that could certainly rally us into year end and put us back up. Maybe we make new highs. Maybe we just get close to them.
So today's hopefully the turnaround that's going to end up just pushing us higher and keeping the float going here. It'll wrap up the week into the hammer candle like you're talking about from a technical perspective.
Yeah. It's as long as we hold. I don't even think we need to hold the gap up here, but we need to stay close to it today to be able to think that going into year end is a positive tone in the market.
So now that we're getting we're at these almost record highs again. If we break through and we do get this hammer, what's your key level then in the S&P 500 for the cash or the futures? Where are you looking for the next level to be then? I should say for a breakout or some form of resistance in the market. What's your key point?
Well, if you look at the October bottom up to the top here, it was about 200 points. Mm-hmm. The pullback here to, say, 1970-ish, another 200 points would be 2170 to the upside.
Oh, goodness. So you're kind of up there with Goldman. I think Goldman's somewhere around 2050, 2150, somewhere in that range. But okay. All right. Thank you.
I'm not talking about the end of next week or the end of the year, but the next leg up.
Okay. Thank you.
So, Greg, we've got the Quad Witch tomorrow morning. What are you expecting out of that?
Well, it seems to me that there's a lot of open interest in the SPYs to the upside, so that you could still see some pressure to move up to the 205, 206 area. I know there's been a lot of activity down below 200, but we're not close to that anymore. So I'd say that if we stay up around the 204, 205 level today, you may still get a little more upside tomorrow, even with the SPY going ex-div tomorrow.
And are you planning on playing the Santa Claus rally?
Well, I've been long. Your listeners and some of my followers know that I do a lot to protect positions with options on the downside. So I've had a lot of put spread protection in place and have just continued to be long through this. So I'll be taking a look at those stocks that had pulled back some and seeing if I can juice up the returns possibly into year end by adding some 1x2 call spreads to the upside on it. So essentially selling covered calls but also buying call spread alongside to juice it up.
So what's on your buy radar right now?
Well, oil names. I wrote something this morning about oil being a possible reversal now, and it's certainly not a done deal. But we've seen names like ConocoPhillips and Oxy Petroleum take a big swing up yesterday and moving back up again today. I think if you see oil back over $58 by the end of the week, a lot of those beaten down oil names start to reverse next week and go higher.
Greg, let me ask you about Oxy. What do you think about their decision to close Fibro? I mean, their timing's pretty amazing, and then to have Andrew Hall step down. Do you have any kind of view on Oxy's decision to close down the subsidiary that was heavily trading commodities and employed the god of oil?
Not really a market view on it. I'm a technical guy, so I don't really follow a lot of company news itself as much
Okay.
as just the price action. From just a historical working at banks and money shops perspective, I could certainly see a company like Oxy deciding that they've had too much of the volatility of traders that have been successful and are not successful this year, swinging around their economics.
So you're buying the oil stocks. What's on your sell radar right now, Greg?
Um, I don't know if there's anything on my sell radar, but what I'm looking at for maybe to underperform a little bit might be healthcare. I see that there's a potential shift going on, sector rotation maybe perhaps, from healthcare into consumer discretionary stocks. It's not full-fledged confirmed at this point, but by the end of the year, we may get some confirmation that it's time to do a full rotation there. And some of those discretionary stocks have been pretty strong all along anyway. Things like Disney, Home Depot make up large chunks of the discretionary ETF basket.
We just had an ETF guy on right before you, and he said the exact same thing. He was seeing the shift from healthcare to the consumer discretionary. So that's funny that you pointed that out as well. Do you put much significance on the January effect?
No, I don't. Only because I think I saw somebody put out a note yesterday that I found very interesting. My view in 2014 has been a lot of focus on statistics and what's going to happen this week seasonally, or what happens when the market moves this way and that way 10 times in the last 25 years. The January effect is one of those things as well, and I think that although there's some history for it, the note that I saw yesterday that was interesting to me was that you can't rely on statistics until you understand exactly what it is that they do not tell you.
Hmm.
What they do not tell you is what is going to happen this particular time. So, it's something to keep in the back of your mind that January at times has been a very positive month, but it doesn't mean it's going to happen this time.
Okay, so I was looking at some of your trading ideas for this week, and looks like you were focusing on Visa. Can you give us a little more detail about that?
Yeah, Visa was like several of the other ideas that I had this week, to the downside, actually. Visa had for subscribers Berkshire Hathaway as well, 3M, Eaton Corp, and all of them were tactical shorts, looking to take advantage of a short-term pullback and possibly an entry using something like a 1-by-2 put spread. So getting exposure short-term to the downside by actually selling premium in that 1-by-2 combination.
What else? What else have you been
They're
seeing?
working out, some are not.
Sorry about that, Greg. I was gonna ask you what else you're kind of seeing in the options market or talking around with some of your options buddies. Is there any individual favorite that perhaps anybody's kind of been talking about rolling into the end of the year? To not so much necessarily an easy trade, but maybe one that seems really really obvious given some of the pricings in the options. I know some guys can, find a lot of value in contracts over a certain length of time. I just didn't know if there's anything under the radar. I don't trade options, so it's kind of tough for me to get a feel on that. I'm just kind of wondering if there's anything hot there. That stands out.
I'm a little bit like you in that I don't trade options based on their intrinsic value or their fair value. I trade them more on a substitute for stock in terms of technical levels that I found. So that high volatility names with juiced up implied volatility is not something necessarily that comes into my radar. I do a lot less selling of premium than I do of buying. options for directional plays, and then protecting with moves in the opposite direction. What I do see is a lot of talk around things like XLE and OIH for crude reversals.
So are you is VIX something that's always out of your peripheral vision then when you're trading? Are you always kind of watching where that level stands? It seems to have been a little noisy for me. I think it was what was it, Tuesday? There was some pretty wild trading, and the VIX was kind of showing some bizarre spikes there. I think I saw a couple blogs talking about they were quoting a broken VIX, and it just kind of seems like there's a little difficulty in pricing some of the volatility that's out there. What do you see as far as volatility goes? Do you think the market's going to continue to be extremely volatile with these large swings, or are we going to eventually kind of get ourselves into a little pennant here and kind of tighten this up a little bit and have more steady, increases in the indices and the other underlyings?
Well, I think if we get back down under 16 or so on the VIX, that will probably be a little more steady, probably at least through year end. The VIX is something that I look at. I don't trade it, but I look at it as an indicator of fear and risk in the marketplace. And for me, whenever it moves above 22, it starts to get interesting to me in terms of the possibility of a correction in the market. But it's a soft line for me. It's not a hard line in the sand like it can be for some people.
Yeah,
but for me, I look at that, and there's a chart that I've put up many times in the past about the VIX breaking up above the 22, 20 level, above all the simple moving averages, the 50, 100, and 200 day, but then crashing back down through them. And every time that's happened, we've gotten a new high in the S&P 500 following that. So I look at it for that as an indicator of potential that we may get back to the point where it's confirming a potential new high going forward in the S&P.
Okay.
Yeah, for that to happen now, we need to get down to like below 14 on the VIX.
Well, hopefully that'll start coming around soon, and we can get some more stability here. I mean, now that Putin's been talking, all night long, and we've had everything going on with the Cuban news, and then we had, China talking about Russia. Do you have any view on everything? I mean, I know you're saying, you're not really a hardcore fundamental guy, but do you kind of have a general view for what's going on in the world right now with the implications of what's been going on with Russia and oil and, the attacks of, South Korea, or the Koreans on Sony? Do you see this level of uncertainty and just these different events that are taking place kind of coming to a head here in 2015 that could cause some serious price instability?
Well, I think that the big thing there, I don't really know what the heck's going on with Sony in North Korea and the movie being canceled and all that stuff. But
I don't think many of us do.
To me, that has been important has been the drop in crude. And we all know that wars have been fought over crude oil. It certainly seems that Putin has backed himself into a corner. He's got no friends. He's got an economy based on oil. And, who are the two biggest oil producers outside of himself, us and the Saudis, and we're not looking to help them.
Yeah.
So there could be a lot more uncertainty going on there. Stabilizing the oil price will probably change that in the reversal, and it will create some more dynamics, I think.
So you're probably in the camp with, well, I don't want to put words in your mouth, but it sounds like you might be in the camp with me that some of this oil sell-off seems to be quite excessive, that it might not be warranted to be going down to, 50, 40, even $30 a barrel.
Yeah, from a supply and demand perspective, I really don't know. From a technical perspective, I put out a note this morning that said, oil had been channeling in what's called a symmetrical triangle for 3 or 4 years, and the breakdown from that pattern targeted and moved to 56, and that's where we got. So if it's going to bounce, this is a good place for it to bounce.
Now, if there's one way that I've learned, at least personally, from ways to identify technical traders, is some of them actually stick to a very structured plan. Other ones tend to use it more of an art. So when you're looking at these charts and you're using these time frames, do you always use, what's the longest time frame you use, and do you always stick to this, or do you kind of flow with it? As you learn your assets, as you learn, behavior in the market, do you kind of just adjust your strategy, or do you have one, cookie cutter? This is how I'm doing it every single time, and carry it out as such.
For me, I follow what I call a mosaic
Mm-hmm.
pattern in terms of developing my trades around technical analysis. I'm comfortable with Japanese candlesticks with traditional patterns horizontal and horizontal support and resistance, triangles, those kinds of things, head and shoulders. I'm comfortable with harmonics and Fibonacci's, and the mosaic to me is when 3 or 4 of those all line up in the same direction and all point to a move in one direction. It's a much more probable trade direction for the stock going forward. So I tend to look for things that where there's going to be 3 or 4 different types of traders looking in the same direction. That said, to further answer your question, there are places where I'm just no good at. Gold miners is one of them. I can never seem to win in gold miners, so they're on my do not trade list.
Is that a public list that we should be promoting for our ratings from Greg Harmon, the do not trade list?
Yeah, the contrarian list. If I ever trade a gold miner, go the other way.
Now, I'd like to ask you a little bit about harmonics. My girlfriend trades that, and she follows Pipzar on Twitter. She trades a lot of forex and talks with a lot of folks about harmonics. I don't really understand how this works. Is there, you don't have to give me a master's course here, but is there sort of a simple explanation that you could use to explain to somebody who doesn't understand harmonics, kind of what the overall thesis is about how to trade using that type of situation?
Yeah, harmonics are based off of Fibonacci retracement ratios, and Fibonacci's are found throughout nature as well as in the markets. So the theory is that these ratios are pleasing to the human eye, and they are so because they exist everywhere in the petals of flowers and pine cones and seashells, and the ratio of the top half of your body to the bottom half of your body, your hand to your forearm, things like that.
Mm-hmm.
So it's what we naturally see. So the thought is that you see these ratios happen and people start to reinforce that this looks like a good place to reverse. Scott Carney is the guy that started talking about harmonics, and he's got a couple of good books out about how to trade these things. But there's really 2 things to take a look at. In some ways, they're like a Wyckoff trading system where you go through several different up-down patterns to get to the point where there's some predictability about where the next pattern might be. So these are basically ABCD patterns where you move one leg, retrace some of it, and move another leg again, and it'll tell you where the next leg might go to. So there's 2 ways to trade these. One is once you get to a point where you can get confidence that D leg is going to actually hit, and the second is once the pattern is fully completed, you get more confidence that a reversal of the pattern may be in place.
Wow. So then I'm assuming you do have to have a system that plots these out for you on a chart, or is this something that's kind of like an art where you have to draw? Because I've seen guys when they do their harmonics, they tend to have what looks like one sort of triangle that flips on a point, and then shows a similar triangle, and then price tends to move within that range. So are these designs is the harmonics? I know it's based off of Fibonacci, but is this something that you have in your charting systems, or do you have to kind of draw these shapes freehand?
There's a charting system I use, TradingView, that does allow for drawing these. It does not have fixed Fibonacci retracements in it, so you need to know what the retracement levels are. But the first thing to look for in harmonic patterns is basically a W shape that's not quite a W. So both bottoms on the W are not at the same level. And that's a place to start to look for potential harmonic pattern.
Okay, excellent. All right, well, thank you, Greg. I appreciate that. Now you're going to give me something so I can go. I can go with my girlfriend, educate me on harmonics, and I can get all lost in the depths of that in those long conversations. So I appreciate it, ladies and gentlemen. That was Greg Harmon. We had him on the show today talking about all sorts of technicals and everything else. Greg, thank you, CIO, partner at Presidium Capital and founder of Dragonfly Capital.
Thanks, Greg.
I wish you a good week, sir, and have a great weekend.
Thanks for having me, guys.
Appreciate you coming on.